What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Ryan Pulis here with another episode of the CPA Zone. Today we're going to talk about business travel costs and how to properly deduct those. So this came up in a webcast I was on not long ago. It was sort of an Ask Me Anything about taxes and a lot of questions on business travel, what you're allowed to deduct, how do you know how to support it. So we're going to just briefly cover that on today's episode. So with any expense, business travel is no different. It must be ordinary and necessary for your particular business. And it's only considered a travel expense when you travel away from your tax home. So your tax home is generally the city or general area where your main business or work's located. It doesn't really matter where you live. So if you live in one city and primarily work in another or operate your business out of another, the place where you work is your tax home. So you are considered traveling away from your tax home if you're required to stay overnight or need substantial rest to meet your work demands. So you're somewhere farther away where you're away on work and you have to stay overnight to really make it not a huge inconvenience for yourself. So what types of expenses can you deduct? So the most common are going to be things like your transportation, such as airfare, so your plane tickets, or if you travel by train or bus. Car expense, if you're driving your own car, you can deduct the mileage, or you can rent a car. Perhaps you need to rent a car while you're there. Let's say you fly to a different city, you rent a car while you're there. All of that's deductible. Your hotel or motel, so your lodging costs, wherever you're staying, maybe you're staying in an Airbnb, that's all deductible. Your meals. So travel meals are deductible, but remember, that's limited to 50%. And then other miscellaneous things like taxi rides or tips at the hotel, baggage fees, all these little incidental and miscellaneous costs. And if you need internet in your hotel, so maybe you need to pay for Wi-Fi, those things also are going to be deductible and allowed. Now, the key is your trip must be primarily for business purposes. So you must spend more than 50% of the total trip on business activities. Maybe you're going to a conference. Maybe there's vendors in the area you're meeting with. So it is okay to have some personal days while you're away. So let's say you travel somewhere in the middle of the week. You get there on Thursday, you have a conference Thursday and Friday, and you stay the weekend. Your weekend personal days. But you're meeting with vendors and maybe other affiliates in your industry on Monday and Tuesday the next week. So you're there a total of 6 days. 4 were for business, and you booked the weekend in there where you did no business. Maybe you spent your time sightseeing. That's fine. Your travel costs, your airfare, hotel, all of that is still fully deductible. Now, on those personal days, the meals you have on the weekend, those are not going to be considered business meals. However, everything else is still fully deductible because your trip was primarily for business. Now, let's say you decide to go somewhere for a conference that lasts 2 days, but you spend 4 additional days doing personal stuff. Well, now none of your trip is considered business. It's not deductible unless you have specific direct costs, like maybe the cost of the conference would be one. Business meals for the days of that conference would still be deductible because they're directly connected with the business purpose. But the airfare, the hotel, those are going to be considered personal for your personal days there because the primary purpose of the trip is not business related. Now, as with any type of deduction, make sure you have the appropriate documentation in place to support it. So you're going to need receipts. So any expense over $75, you should have a receipt for. The exception to that is meals, which really you should have a receipt for all of your meals. You want to have some sort of schedule or calendar showing the business meetings and conferences, the types of activities you attended and the times they ran. And then just some sort of note documenting the purpose of the trip. Like, what makes this a business trip? And again, make sure you have the dates and location all saved on your calendars. So this is additional support, your plane tickets, a copy of your hotel receipt. All of this stuff's going to be key to supporting your deductions. Now, you say you're self-employed, what if you take your family with you? Well, unless your family works for your business, their travel costs will not be deductible. However, what we like to see is generally your spouse, let's say, is on your board of advisors. So you have your LLC, or maybe it's your corporation, you have a board of directors. And now your spouse is on your board and they can travel with you, especially if the point of the trip is to have your annual board meeting. Now your spouse's travel costs are also deductible. Just make sure you want to keep it reasonable. If you're traveling to hold your board meeting, the IRS has rules when anytime it comes to meals, entertainment, or travel costs, it can't be lavish or extravagant. So just keep it reasonable. If you're traveling internationally for business, the rules are a little bit different. So domestic U.S. travel, primary purpose of the trip is business, and more than 50% of that trip is related to business activities. It's fully deductible. With international, it's a bit different. You allocate depending on the percentage of days spent on business compared to total days. So if you travel internationally for 10 days and 7 are business, even though that's more than 50% in the US, that whole trip would be deductible. International travel, you're going to prorate it. You take 70%. So that about does it. Just a quick recap of what is deductible for travel purposes. I hope you found value in this episode. If so, please leave us a 5-star review and hit that like and subscribe button. Until next time, have a great day.
This audio segment was edited by me, Adam Rothstein. If you would like help editing your podcast or narrating your audiobooks, please email me at adamrothstein29@gmail.com. That's ADAMROTHSTEIN29@gmail.com.
One last thing before you go. We have put out a free ebook for our listeners. You can find a link to this in our show notes. It's called the Rental Real Estate Investor Tax Guide and covers all the basic tax-related information for real estate investors. We hope you like it. Again, go to the show notes to download your free copy. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's THEPULICEGROUP.com/contact.